Hello Mountaineers, we have Mount Way Say today as part of our newsletter. This is just a little update on the industry. It's November 2025 and here's some of the latest that's been going on in the market. So first and foremost, investor lending. It's at an all-time high and I'm reading some statistics here. It's up 13.6% in September and that's quarter-on-quarter growth. And there's now something like 57,000 new investment loans in that quarter, which is the highest on record. So that's the highest amount of new investment loans in a quarter ever, okay? And now this is an interesting situation because we've had overheated investor interest in the market before in the Australian property market more than 10 years ago, and a raft of changes came in from the regulators to cool that all down. Often what you see is some things happening depending on the lenders and where they view this. Right, so some lenders, for example, will probably be responding to some backroom conversations with the regulator, APRA, and starting to make changes around the edges. You know, so we don't really get a cooling in the market, but certain borrowers, they just want to sort of snip out. And then other lenders are sort of like, they're still 2 feet in because they obviously see opportunity for the now and they want to be part of that opportunity. So I'll talk about that first. UBank. Right, we really like UBank because they have a very innovative credit assessment process and a pretty good product. They're owned by NAB, so they're not just a Johnny upstart. So they have increased their loan to value ratio for investment lending to 90% without lender's mortgage insurance. Without lender's mortgage insurance. So if we're talking about a loan of something like 500,000, 90% for an investment property, your lender's mortgage insurance could be $12,000 to $15,000, and with UBank you don't get that. It's an incredible move, and their interest rate is obviously a little higher to compensate, but in my opinion not disastrously higher. It's actually quite tolerable, and given property price rises that are happening, and if we expect that to continue happening, you could potentially go into the market with a UBank loan, ride it for a little while, reassess, revalue your property, get that loan to value ratio down on 80%, and sit on a normalised price. You've never paid an LMI fee and it's altogether better off for you. Now, if you want more information about this change with UBank or UBank generally, please just get in touch, hello@mountway.co. So that's quite interesting. That's UBank really backing this trend in investor growth in the market. But then we see something like Macquarie Bank, which is now a dominant force in the home loan market, snipping at the heels of all the big four and really becoming a powerhouse here. And they have turned off a certain type of investment lending involving trust borrowers. They've cited a bunch of reasons, and essentially there's a few things happening in the regulation with regards to how trusts are identified and how we track the flow of money through trusts, and that is a bit nuanced. It's not very easy. You need legal people in the banks to review trusts just to sort of meet the regulatory requirements, and they're going up. But that's not the real reason. Macquarie has specifically cited social media driven hacks, marketing that promises trust companies will boost borrowing capacity or provide tax asset protection benefits without fully reflecting serviceability or compliance risk. What that means is that people can use multiple trusts and generate borrowings in multiple trusts with multiple investment properties across them and not put those forward in the servicing assessment, and therefore they are able to borrow more and more and more because there's certain loans undisclosed in that situation. And it's very difficult for checkers, brokers and banks alike to use the tools at our disposal to actually see whether or not there are undisclosed debts and properties in the mix. And a prudent lender, as regulated, would need all of those properties disclosed. So there is a risk there that they would not be lending responsibly due to the trust. So they've cited that, and they've cited that this social media driven trend towards this type of investment lending is their main driver, which is to say that they are cutting away some of the heat in the investment market with the borrowers that they see as most risky for them. Now that's an interesting move because that is one of those sort of like harbingers of more changes to come. If there are regulatory changes ahead, you can expect that they start around the fringes like this and they move in and in and into the mainstream, right? The most powerful change that might be seen in investment lending to cool that side of the market would be pricing, and no one has gone there yet because all the banks still want to participate here. Now, pricing is the difference between an owner-occupied loan and an investment loan, which currently sits between, the best is about 0.2%. So 0.2% more expensive for an investment loan at a minimum. Now, that's been much higher in the past, and it could be one of the tools at the disposal of the banks if they're pushed by APRA. But you can expect some other changes potentially in policies such as this from Macquarie, where trust lending is pulled away, and then maybe they look at other forms of investment lending that they find a bit on the nose, such as refinancing and cashing out additional money on an investment property. So these things matter. And recently I did a post as well about taking equity when you can. These are the type of policies. They may just trim down your ability to do that, and they can change quickly. All of a sudden your bank or a raft of banks available to you are not letting you cash out, and therefore not letting you have that ability to roll into new investments. So take gains when you can. It's essentially the lesson. So that's the movements in the investment market. We've got some regulation changes, we've got some banks making moves, and we've got other banks who are still very much surging ahead. That's it for now. Hope you enjoyed this Mount Wei Say. Catch you next time.